Hey everyone, we're just gonna get started in a minute. Welcome to the live stream. I'm going to be starting in just a moment. Hope you're having a great day so far. Alright, let's get started. Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is September 1st, 2022, and the question that most people have is that will September be bearish, right? Will September be bearish? And the reason people pose this question is because historically you have something called seasonality in the stock market, and you can have it in any market. Seasonality is what? Seasonality is based off of a calendar period, right? It could be a certain week, it could be a certain quarter, it could be a certain year. You tend to see patterns in stocks or any market, right? Either going up or going down, right? And they say that September is particularly bad for stocks, right? If you look at seasonality patterns, right? And so if stocks are going to do badly in September, then crypto should also do badly, right? Because they're so heavily correlated, these equities, these risk on assets. And the other thing people are saying is, don't fight the Fed, interest rates are rising, so on and so forth. You're not going to have people investing in these types of assets given the state of the market. So what we're saying is, let's put all that aside. What do the charts say? Okay, and this is as technical analysts, I think that's the key question. One of the reasons people do technical analysis is to cut through all of that stuff, right? Seasonality patterns are spurious at best. I'll challenge you, go and try and find how strong these patterns are, how strong these relationships between, price going up or down and what month it is. They're not very strong, right? And the beauty about the beauty about technical analysis is that it allows you to cut through all that noise and look at the charts and say, well, what are the charts telling me? And according to what the charts are telling us, September should be quite bullish. September should be quite bullish. All right, before we get going down the line and continue the analysis, please shout out where you're coming from, where you're listening or watching from. And yeah, definitely like the stream if you guys are getting value. Also subscribe if you're not yet subscribed. I'm going live now more often than not, and the thing I'm doing is I'm going to cut certain pieces of the live stream and edit it lightly for the recorded content. Hey Osman, what's up? Welcome. Alright, so that's what we're going to look at. And how are we going to analyze whether or not September should be bullish or bearish? We're simply going to look at what we've always been looking at. Bitcoin as a proxy for the cryptocurrency markets at large. We're going to look at the S&P 500 through the SPX index, all right? And we're also going to look at the DXY, and we're going to have a look at Bitcoin dominance. That should give us a good idea as to what the rest of the cryptocurrency markets are doing, all right? So let's get in. Let's start with Bitcoin, right? Since this is indeed the daily Bitcoin update. And let's go on a smaller time frame. Let's go on a 15-minute time frame. Okay, let's get rid of this. So since yesterday, what happened? Yesterday, we saw that, right? We were basing, there's all this kind of up and down price action. We don't know really what the market's doing, well, generally speaking. When I say we don't, I'm saying it's just chop. A lot of people are just ascribing this to, random, upwards, downwards, price action. Some people are saying, all right, this is just preparation for greater dump. A lot of people are saying this, right? And I'm not just speaking anecdotally. We can look at what's going on. So here, let me show you something. Here, if you go into your open interests, and here we have open interests for Bitfinex, right? You can see that the Bitfinex shorts are up, okay? Granted, this is a 15-minute chart, but Bitfinex shorts are up. Do you see that? They're up. But the problem is, if you're short, even the shorts are respecting Elliott wave theory and general technical analysis, and you're getting a double top on the graph that shows how many shorts there are. So basically, it's showing that the shorts are eventually going to come down. How? Because the market's going to go up and shorts are going to be stopped out or liquidated, okay? So that's what we're seeing. We're seeing a double top on Bitfinex shorts. And why do we track Bitfinex as opposed to Bybit, Phemex, or any other exchange? It's because Bitfinex is pretty reliable in that most users are big users, right? Large accounts, whales, institutions. That's who trades on Bitfinex, okay? You don't, the common person, the common retail investor doesn't have a Bitfinex account, okay? And if we look at the longs, okay, you see that they're going up and establishing a trend, okay, which is important. So that is a good, it is a good herald for, increased price action or positive price action. So yeah, a lot of people are going short, but with basically on the idea or on the premise that, the story is bad. The story for the economy, the story for Bitcoin, the story for risk on assets are bad. And this is the issue, or this is the challenge of trading narratives. Are you going to trade a narrative where, oh, don't fight the Fed, right? Interest rates are going to rise. Like, you want to short, go right ahead. The charts are saying the opposite. Why are the charts saying the opposite? So, ever since we've hit this low here on the 28th, right? Towards the end of the month, we've just been ranging, okay? Again, most people don't know how to read this. Most people, at best, see this as some sort of consolidation continuation, okay? So the previous trend was down, you consolidate a bit, and then eventually you break down again, okay? But if you look closely, what you see is a consolidation reversal pattern, okay? How do we see a reversal pattern? I think this is best seen on this 15-minute time frame here. I'm going to draw it out for you. You see a three-wave move targeting wave 4 of the previous trend. That's your initial break of structure. Let's call that big A. You see a counter wave. That's your counter to the, A wave, right? You always have a counter. Everything's balanced. So that's big B. Then you have another A wave, right? Because you typically need 2 degrees of AB basing. It's not just one. So that's the first degree right here. Right here, that's your first degree. And then your second degree is right here. So if we just label that. Here's your A wave. And then here is clearly a 3-wave move, a 3-wave move, and a 5-wave move. And I sort of annotated that 5-wave move. So a 3-3-5. What's a 3-3-5? Every time you see a 335, you know that's a flat correction. Any corrective pattern, that's 335. So 3 waves up, or 3 waves down, 3 waves up, and then 5 waves, because it always ends in impulse. And that impulse in this case happens to be an ending diagonal. Okay, that is a flat correction. That's a B wave. Those are 2 degrees of AB basing after this trend. Okay, remember, you always get 2 degrees of AB basing no matter what the time frame. We already got the 2 degrees of AB basing on the larger time frame, right? With respect to this entire market, right? So like if you look on the daily time frame, you see 2 degrees of AB basing. That's all done. Now these are smaller degrees of such AB basing, and that, like I said, started on the 28th. So it's just been a few days. So here you see that it's likely to be a consolidation reversal, and the next move after this B wave down is up. Okay, so if we start going up in this entire consolidation reversal right here, and then we continue to go up, that not only confirms this as AB basing, but also, let's go on the daily time frame now. That confirms this as AB basing right here. Whoops. So this is a big AB base. Do you see? Like that, what we just looked at is a small one. That's, that's a tiny bit. But here you have the same thing, just on a larger time frame. Again, it's always time frame specific. Okay, so you see here you have your 3 wave move down. That's your big B, and then you have, I think it's, sorry, that's not it. It's like this. That's your big B, that's your small a, and then that's your small b. Okay, so those are the 2 degrees on the larger time frame. I hope you guys understand this. This is one of the ways you can read this consolidative price action. Again, you have to be careful because it's all about context. The only reason we're looking for a consolidation reversal here is because we read the prevailing price action and we determined that specific Fibonacci levels were met on the downside, completing this larger ABC flat correction. Okay, I'm not going to go too much into it because I've talked about it enough on this channel, but essentially you always want to read with context. So this is a large ABC pattern, okay, flat correction, again 3, 3, 5, and you read this as your impulse, and then you look closely in there and you see a double zigzag. You try to read the double zigzag. You use your indicators like your Fibonacci levels, your extension, your retracement. You try to use those as corroborating tools to your analysis. You should get certain levels that you're looking for, either 1 to 1236 or 1618, your phi ratio, and that tells you, okay, now you can start looking out for consolidation reversals. You guys understand? It's all about context. You have to know where you likely are, what to look for. If you're just like, I don't know what to look for, it's hard to find, right? This is a big puzzle, and you got to do it bit by bit. Start with the largest pieces and go to the smaller ones, okay? So for me, that's basically a reiteration as to why it's very likely that we not only have a big move up, but that big move up happened during September, okay? You see that, right? Will this be the last of AB basing? I don't know, but it could very well be, okay? I know that at least in the short term, this is going up. How far it goes up is the question, okay? Now, let's have a quick look at other assets in our watch list to see what they're doing. Because remember, this is indeed alt season. How do we know it's alt season? You go to Bitcoin dominance, and we've broken 40% for the first time in a long time. What do I mean by that? Let's go on the weekly time frame. And for those of you who don't know what Bitcoin dominance is the measure of Bitcoin's market dominance in the entire cryptocurrency market. So if Bitcoin comprises right now 40% of all the capital in cryptocurrency, that means it's basically 40% of all the money that's in crypto. If it goes down, that means that other assets are getting more valuable against Bitcoin. Do you see? That's what this means. So if we're looking and Bitcoin dominance is going down, that means either other things are going down less, or as Bitcoin's going up, other things are going up more. Do you see what I mean? So by looking at this graph of Bitcoin dominance, we know that the rest of the market is making moves. The rest of the market has been making moves since right here, June 13th, thereabouts, right? It's been making moves right there, making moves. Obviously, this is an alt season. December of 2020, the rest of the market was making moves against Bitcoin. That's how you read, and that's how you use Bitcoin dominance as an indicator, right? It just gives you an idea as to what's going on in the market, okay? Another way you can do that is simply look at your bubbles, okay? And what are the crypto bubbles? It's just a nice way to scan the market, right? Obviously, the green means positive price action. The red means negative price action. And we can see, Luna Classic has made a big move. There's not that much other green big movers, but things are basically at a bottom, if not turning around. How do we know that? Because the bright red are things that are going down actively. When they're kind of pale red, that means they're turning around. Even though they're still negative, they've turned around, okay? So just have a quick look and see what's happening. Again, you have big double-digit movers, right? Celsius, Luna, Balancer's almost at double digits, right? That's in the top 200, top 300. You see, you have Magic. I don't know what that is. SYS. I don't know what that is. Double-digit mover. Okay. Top 400. We have quite a bit of active red. Okay. So obviously, it's not all peaches and cream in the cryptocurrency market right now. If anything, I would say that we are at an inflection point. We're at a bottom, okay? And we still have yet to move up. This ANC is a double-digit mover in the top 500. And finally, let's end it up with the top 600. Yeah, much ado about nothing. But this is really indicative of what's been going on in the crypto market. As you can see here, we've essentially been, let's zoom in, back on the 15-minute time frame. Okay, we've essentially been going up and down for quite some days, okay, going up and down. And that, for us looking for consolidation, that's a good sign. Because the more you base, the higher your move, right? The more you base. What is basing? Basing is accumulation. You're accumulating buy orders, accumulating buyers, accumulating buy orders, but you're also accumulating sell orders, because some people think the price is going to go down and they're betting on it to go down. So what happens when the price goes up against them? It forces them to also buy, creating a short squeeze. Okay, so even the sellers are in accumulation here. Okay, everybody's in accumulation. That's what consolidation does. Consolidation gives you the opportunity to accumulate buy and sell orders at any given point, so that the resulting move, this is the cause, all right? This is, speaking in Wyckoff terms, this is the cause. The big move is the effect. You get a big move as a result of the cause. And not only as a result of this cause, but again, as a result of this larger cause. Right? All of this, all these 80 plus days of accumulation. What do you think's happening here? That's people buying and selling, right? So when we do break this, it's going to be violent, right? If it's down, it's going to be violent. If it's up, it's going to be violent. But there's nothing that's going to be kind of tame about this. This is why every big move is preceded by accumulation, right? Just, it's logical, right? Let me take a second to check the chat. Whoops. Wrong window. Here we go. Hey Milad. Salam. So yeah, so that's basically what we're doing, all right? So now let's have a quick look at the other markets, okay? So we know Bitcoin, according to our analysis, is likely to yield a move to the upside, okay? Right? We've been playing at this 20K level and a little bit below the 20K level for many days now, approximately a week. So ever since we hit this orthodox low, it's been 3 days, but before that even, we ended in a ending diagonal. So let's say 3 or 4 days. It hasn't been that long, to be honest, okay? But if you look, you already have certain assets like Litecoin, which has started moving up, okay? Up and out. So looking at Litecoin, you can see also for the past 3 to 4 days, or even longer, right? You've been in this accumulation, okay? And again, you accumulate buys and sells. So whenever you do move, if you move up or if you move down, it's going to be a big move. Now, this is very likely a move preparing for a move to the upside. That's what you see in these W patterns. You go on a larger time frame, like the daily time frame, right? And let's turn on our momentum indicator, and you can see you have bullish divergence here, okay? So this low and that low make a lower low. Actually, let's use our arrow. Let's be clean about this. Here you go. You get a lower low, right, in this W bottom that I showed, a lower low in the vertices, and then in the momentum indicator, you get a higher high. Guys, technical analysis doesn't have to be complicated. You don't have to be so fancy with, this is a double zigzag, this is a expanded flat and running flat and, all that stuff. Sometimes the simplest analysis is the most effective. And I think it's very useful and very wise to learn how to read price action, right? And you want to use that first and then use your indicators to corroborate your reads. But if you really have no clue, look at your stochastic RSI on a high time frame, daily, weekly, monthly. Look for strong bullish divergences and then play that. That's it. That's literally it. Do you see? Higher high, lower high on price action, higher high using the lows, right? Confirmed lows. Either use confirmed highs or confirmed lows right next to each other. This is confirmed strong bullish divergence. You should get a big move up as a result from this. You see that big move up already playing out in Litecoin, okay? What else is already moving? EOS. Not as much, but a little bit, okay? So far, Litecoin seems to be the big mover. Let's see, general. Here we have Balancer. Balancer started to move. Again, what do you see here? you have a higher high a little bit, but a much higher high here. Okay, so a higher high in price action, but a much higher high in the momentum indicator. That's strong bullish divergence. This would have told you that at this inflection point, you should expect a move up in price. Okay, so this is how you use your indicators. Keep it simple. You don't have to use, some fancy this or fancy that. It's just, a lot of times what you see in front of you. Here, Cartesi or Gitcoin, a great example of a nice lower low, and now an even low on the momentum indicator. Okay, now given that we're talking about bullish divergences and divergences, let's look at our S&P 500, because a lot of people are saying, well, there's no way stocks are moving up because, as given that stocks are, some people believe the stock market moves the cryptocurrency market. And that basically crypto waits to act before, they have an idea that first the stock market moves, and if the stock market moves up, then the crypto market can move up, and stock markets move down, crypto market will have to move down. They're assuming, one-to-one correlation 100% of the time, even ignoring the fact that 15 or so months ago, crypto markets were uncorrelated to traditional markets. But let's leave that aside. That being said, is the stock market going to move up for September? And my answer to that is yes. Why do I say that? Okay, we're on the daily time frame. And if you followed yesterday's analysis, you'll know that we're counting on this B wave to play out. All right, this is a B wave, 1, 2, 3 wave move, okay? And we know that the last wave of any corrective wave is going to be impulsive. That's essentially what we're in. We've hit the first wave of 5-wave impulse to the upside, okay? And that's a response to this 3-wave move breaking that 650-day, sorry, I don't know, that was a really terrible arrow, that 650-day uptrend right here, yeah? So that was the initial break of structure. Every corrective wave has a counter. So you have an A wave that goes down, expect a counter wave, okay? And what does that mean, fundamentally speaking? It's just people that think that this is still going on. They think that this was just a temporary break. So this falls, and then they buy more because they think, oh, that must be going on. That's basically the psychology behind the technicals, okay? But essentially, you've already got one wave, so expect a third wave, a fourth wave, and a fifth wave, okay? And so that's why we think the crypto market is going up in September. But why specifically in September? Maybe why not October? For that, we need to zoom in, okay? But before we zoom into that, I want to show you something. Just like I showed you in crypto, strong bullish divergence, right? I can show you the same thing in the stock market on the daily time frame, okay? The higher the time frame, the more reputable, or not reputable, what word am I looking for? The higher the time frame, the more believable, the stronger the indication. The higher the time frame, yeah, the more likely it is to play out, okay? So on the daily time frame, you see, you formed a lower low in price action, right? Much lower low, right? One here. But in your Stochastic Rsi indicator, again, we're not using anything. Up until now, we literally have only used one indicator. I have other indicators. I've learned how to use other indicators, but a lot of times you don't need that many. You literally need one or two. You just need to learn how to use them and not to rely on them too much, because your main analysis should be done with price action, right? That's just my belief. Everything's in the price if you know how to read it, okay? So you see here, you have strong bullish divergence on the daily time frame, not the 15-minute, not the hourly, not the 4-hourly, the daily time frame. What do you think happens after that? Again, the momentum is up, your price is going to follow the momentum. It's going up. And it's already on the daily time frame giving you one of these, Okay, and we talked about this. If you look at the candlestick analysis, when you have a candle body and a wick to the downside, that wick to the downside is showing you strong buy pressure. That's why there's a strong wick to the downside. Okay, that's exactly what you have here on the daily time frame. Now let's zoom in and see what that move looks like on the smaller time frame. Why we can expect not only movement in September, but movement today. Okay, so let's go on to the hourly time frame. And now let's delete the arrows. And on the hourly time frame, you can see what you have is not only do you have strong bullish divergence on the daily time frame, but you can see it on the smaller time frames as well. Let's do it again. Okay, lower low in price action. This is the S&P 500. Okay, this is the stock market that people say is not going up, that they say it's a fake rally. We'll see, but it doesn't look fake right here. That strong bullish divergence on the hourly, and you see it starting to play out. Okay, what's important about this is you gapped down, meaning, you know, the stock market closes, unlike crypto. So that was the gap, right? And then you come back up and you fill that gap, and you're gonna continue and play out this strong bullish divergence on the hourly time frame. And essentially what you're doing here, if you really want to read the price action, is you're putting in an AB base and a rounded bottom. Okay, so assuming this was the end, right, of your trend, of your downtrend. Again, the end of the trend of a downtrend typically looks like this. You have a strong bullish hammer candle, signifying capitulation of the move, exhaustion of the downtrend, buyer step in. That's why you have a wick to the downside. Okay, so this was your initial break of structure here. 3-wave move targeting wave 4 of the previous trend. Okay, every A wave comes with the corresponding B wave. Okay, so we're looking for 3 waves down, and that's 3 waves down. Then you get a small a, small b, right? Which may likely be here. A small a, small b, and then you reprise the trend. Now let's zoom out and get an idea as to why we stopped where we stopped. Okay, so on the 4-hourly time frame, you can see if we claim this to be wave 1, we can count it. Okay, it goes something like this. Okay, so 5 waves up and 3 waves down, right? That's your Elliott wave sequence. Whoops, that's not what I meant. I want ABC down here. A, B, C. Let's make that white. Okay, so we have 5 waves up, 3 waves down. We take our Fibonacci retracement tool from the bottom of the 5 waves to the top, and we see that we've retraced to the 618. This is where we expect wave 2 to end up. Wave 2 is a sharp correction, and this indeed is a sharp correction. Tends to be sharp, and it tends to be down to the 618 region of wave 1. Why do we have that? And I repeat, fundamentally speaking, what happens during wave 2 is the average retail investor, the average market participant, does not believe the change in trend. So the trend was down, you pivoted right here, then you had an impulse in wave 1. Most people are selling into strength, meaning they're selling the top of this move. They say, okay, this is my way to get out because I think the main trend is going to continue down. This is why you have wave 2 being sharp and typically a 3-wave zigzag move, which is what you got here. Okay, it's a nice quick ABC zigzag down to the golden mean of wave 1. Okay, so that's basically what you can expect. People who are saying, oh, do you see this? That means that this was fake, know nothing about price action. Okay, that's exactly what you do expect. You do expect a sharp decrease. And let's remember, I always say on this channel, according to Elliott wave theory, waves of the same degree are comparable or equal in time and in price. Let's do time analysis. If this is indeed true, that this is wave 1 and wave 2, they should be equal in time and in price. How are they equal in price, you may ask? Well, the price of this is equal to that, the golden mean of that. So it's 61.8% of that. So this decrease of 61.8% is what you can expect. That's the equality or comparability in terms of price. Now, in terms of time, if we took, let's get our time measurement out, the beginning of wave 1 all the way to the end of wave 1, we got 33 days, okay? The beginning of wave 2, end of wave 2, we got 15 days, so about half the time. Is that comparable? I don't know. I wouldn't be surprised if, in order for the price to resume wave 3, we put in some more A/B basing that took 15 more days for that reason. Do you see what I mean? But at the end of the day, you're going to be playing up here. Maybe you make a lower low, but at that same time, even though, if this is true, okay, if this is true, even though the stock market's doing something like this, creating a rounded bottom for continuation in wave 3, do expect Bitcoin and cryptos to continue to go up, given that although they're correlated, it's not, people think correlation means if it sneezes, Bitcoin will have to sneeze. No, like, you're correlating trends. So the trend's still correlated. Even though it's basing, it's still moving up. For instance, you'll see that during this time that the S&P was going up, okay? Oops, sorry about that. During the time that the S&P was going up, it was mid-July to mid-August, okay? If Bitcoin and the S&P were so correlated, well, during mid-July and mid-August, the stock market was going up. What was Bitcoin doing? I don't think it was going up. Mid-July to mid-August. Let's see. So mid-July was about here. Well, it kind of was, right? Mid-July. Thing is, yeah, it was going up, but it wasn't going up as impulsively as the stock market, but it was going up, okay? It was going up. So yeah, that's pretty much what I see. Like, it's possible that the S&P does start its wave 3 right here, and that it basically, that wave 2 took half as long as wave 1. Okay, that's possible. That's comparable, because when you talk about comparable, you're talking about sometimes proportions. So it doesn't have to be 1. Sometimes it's 618. Sometimes it's 0.5, right? Sometimes it's twice as long, right? Sometimes wave 4 is twice as long. It takes twice as long as wave 3 took to form. That's still comparable because there's some relationship, but it's not wanton. It's not like 10 times as long. It's not crazy like that, right? But so it's possible that we go into a wave 3, but it's also possible that this result in some A/B basing. And remember, A/B basing can look a number of different ways. You can have A/B basing where you put in zigzags, so it's a corrective move to the upside. You can have A/B basing like that, okay? So that's the S&P, and so this is why I believe S&P, yes, is likely also to go up during September. Also, remember, on the low time frames, you're completely oversold. You're double bottomed. Okay, you're oversold and double bottomed. This is a 4-hourly time frame. We did bullish divergence on the hourly time frame, on the daily time frame. Now we're going to do it on the 4-hourly time frame. Notice lower lows on price action, right? One here and one there. And what do you see in the Stochastic Rsi? You see a double bottom, completely oversold, and you see it even. So that's strong bullish divergence on the hourly, the 4-hourly, and the daily time frame. Very likely to get a move up in the very near future. Last thing we're going to look at, guys, and before I do that, let's just have a peek at the comments, making sure I'm not missing any questions. Wrong one. I don't want to look at that. What do I want to look at? Oh, here. Okay. Milad said it's ENS. All right, we're going to have a look at ENS coin in a bit. For sure. Okay. So let's look at the DXY, just like we did yesterday. So immediately, if you wonder what happened, the chart is telling me that I can't see the DXY on that time frame, right? I was on the 4-hourly time frame. It says no, we don't have information for the DXY on the 4-hourly time frame. We're going to have to switch you to the daily time frame. So that's we already know that the daily time frame is the only one that we can see this DXY, this dollar index on. Okay, so let's change this to dashed lines or dotted lines actually. Okay. And again, you can see what I said yesterday. Day in and day out, what are you getting? You're getting, so we talk about candlestick analysis. This is what we call a doji candle. It shows indecision. So the candle body's in the middle, there's a wick to the upside and the wick to the downside, okay? It typically shows indecision. But always have to look at things in context. So at the top of a trend, that's quite bearish, okay? It's not as bearish as if the candlestick looked like this, but still, the wicking to the top basically shows that there's a lot of selling pressure here. There's a lot of resistance here, and price is unlikely to move past that level. That's what these candlesticks are showing you, and this is the daily time frame, mind you. So on a daily time frame, it's unlikely that we get a move up and past this. Is it possible? Absolutely. This could be a wave 4, okay, and you could have one more wave 5 up, but that's generally what that says. Okay, now if it's hard to count these waves on the daily time frame, we would have to go into smaller time frames. That's why we don't have a nice wave count of this trend up, okay? But essentially, what you can see on the daily time frame, besides the candlesticks, is you can see strong bearish divergence, okay? You can see strong bearish divergence on the daily time frame and the weekly time frame. First, let's look at the daily time frame. Here, you have your price action pretty much even, right? It's even, if anything, maybe you're making a little bit of a higher high, or you try to make a higher high. You try to push higher right here, from here to there. Okay, so let's just say, for the sake of this, you try to push higher even though you got rejected. Okay, here on your momentum indicator, even though you got rejected, you made a lower low. The momentum is showing you, just like it shows you at the bottom of a market and shows you bullish divergence, momentum is showing you it wants to go down. Do you see that? And you're completely overbought. So unlike, you know, for crypto, for the S&P, you're all the way down here in oversold territory, right? You're all the way down here in oversold territory. You're literally at the opposite end of the spectrum with the DXY. You're in overbought territory, and it's likely that you come down and make a move down here. Okay, so that's what I'm seeing on the DXY on the daily. Now, remember, just because we can't see any smaller time frames in the daily time frame doesn't mean we can't see larger ones. So let's go to the weekly really quickly and look at what you see here. Okay, so you made a double top essentially, right? You went up to this level here, you came down, right, for what we think is an A wave or initial breakup structure, 3 waves down, and then you came back up to retest this level. Okay, meanwhile, what happened? So on the weekly time frame, you're getting, okay, so you got a bearish divergence that already played out, okay? So you get a higher high here and a lower, whoops, and a lower high here, okay? That played out here. That bearish divergence on the weekly time frame tells you that something's coming, okay? And remember, every corrective move happens in flavors of three, in waves of three, okay? So this is your first wave, this is your second wave. Even though it's up, don't be confused. Understand that you need to get a third wave to complete this three-wave move to the downside. This is also why it's very likely that stocks are up in September. Although this is the weekly time frame and we have the daily time frame, the presence of the doji candles and the bearish candles with the with the wicking to the top on the daily time frame let me know that this trend is exhausted, and also the bearish divergence on the daily time frame right here. Okay, so that's what I'm seeing on the DXY. So those three put together, the DXY being bearish, the S&P 500 being bullish and at an inflection point, and cryptocurrency as seen through the eyes of Bitcoin and Bitcoin dominance, that tells me that September is going to be particularly bullish. So yeah, I'm still sort of very expectant of a big move. When that big move is going to come, I don't know exactly, but I think it's going to be soon given our analysis, right? So yeah, let's go back to the chat and let's see if there's any other comments, and then we'll have a look at some altcoins, okay, and then call it a stream. All right, so Maurice says he's currently in a short. He hope it dumps. Yeah, good luck, man. Good luck. Yeah, I obviously hope it pumps because I'm in a bunch of longs, but you know, it's all about risk management at the end of the day. You whether you win or lose, you want to protect yourself and make sure that you don't lose your shirt. So however you bet on the market. Yeah, Milad said he bought more. I also bought more last night. I just can't stop. I can't stop. So, all right, let's look at ENS for Milad. Let's see about looking at it on Binance. Okay. Again, as always, let's start on a large time frame to get some bearings. Actually, let's start on the weekly time frame to get context. Always important to get context. Weekly. Let's go on the log scale. Okay. So, ENS, I remember when it came out. It's not that long ago. Ethereum name service. Okay. It's obviously going to be associated or correlated with Ethereum. Okay. So it looks on the weekly. Let's just see our momentum indicator that it bottomed in July. Okay. So just again, using these momentum indicators will give you a lot of information. On the price, you see that you formed some sort of consolidation channel, okay, some sort of consolidation range, right? And that lasted a few weeks, more specifically 70, 80 days, something like that, all right? And during that time, your Stochastic Rsi indicator, your momentum indicator completely bottomed out, and so you were oversold, okay? And from there you shot up, okay? And it seems to be that you came back down right here. Actually, let's keep that on. You came back down, you went up, you came back down to retest and to go back up. Okay, that's like large time frame. That's what I'm seeing. Okay, now let's jump down into the daily time frame. And let's get rid of the momentum indicator. Okay, and now let's focus on that level of consolidation reversal. It looks like consolidation reversal to me. Okay, now this is a truncated chart, so it's cut off because this hasn't existed for long. But what this tells me is it's basically mirrored the trend, the rhythm of the entire market, where it's coming out of a big downtrend, and that downtrend would be the impulse of most of the market's ABC correction. Okay, that's basically caught the last bit of that impulse, right? So everything in the market corrected in either a zigzag or a flat correction, and then that impulse is what you got here. Okay, and so this was the bottom of the market, and it seems to be that just like most other altcoins, you have May 12th as your orthodox low right here. Okay, and from there you get a bounce, and that bounce takes you up to wave 4 of the previous trend. Okay, and that would be your big A. And then you have a counter move, which is obviously B. And then here you have one move up, that would be small a composed B wave. And on July 13th, like Ethereum and like some other altcoins, you seem to have 5 waves up. Okay, so now let's zoom in a little more. Like every asset has a story. You just have to be able to read it. Okay, it doesn't have to be 100% exact, but you can try and make sense of it. It's not just a bunch of squibbles, you know what I mean? And so, from what I'm seeing is this is likely that July 13th, you started your impulse. So you got one wave, and then one wave here, 2 waves here. Let's see. 3 up here, 4 down here, and then 5 here. Okay, that's my count. So let's turn the lines on just so you can see it. And for me, this is also something that you want to do if you're just getting started, but you want to just roughly measure and make sure that your waves are believable. So wave 1 retraces between the 382 and the 618. Or sorry, wave 2 retraces between the 382 and the 618 of wave 1. Yes, that's correct, right? And it doesn't retrace beyond the 618. Okay, wave 3 retraces. Here you have an extended wave 3 because it's way beyond the 1618 or 2 Fibonacci extension of wave 1. You have a tiny little wave 1 and a massive wave 3 that comes all the way to the 4236. Then you have a relatively complex wave 4, so that by the guideline of alternation, you have a simple wave 2, complex wave 4, so that's good. Wave 3 is the longest, so that is good. It's not the shortest. You typically have wave 3 being the longest, and you have 5 waves in wave 5. Okay, and that wave 5 should be about 618 of wave 3, and that's exactly what you got. You see that? You took the Fibonacci extension of wave 3, retracement of wave 4, you target the 618, and that's what you got for the end of wave 5, around there. Okay, so that's something you want to do when you're getting started, just to get an idea how to count waves, because there's math behind it and there's probability behind where you put, your measurements. Okay, now everything from here is an ABC correction, and so you can count that out like this. So again, it's just 3 waves right here. Initial break of structure, targeting wave 4 of the previous trend, a counter wave, wave B, and then 5 waves down. Okay, and that's an ending diagonal most likely, and I'm going to show you that in a second. Okay, go something like this, and then at the end of the day, if you take a Fibonacci retracement from the bottom of ENS, okay, right here, bottom of wave 1 all the way to the top of wave 5, retracement is down to where we think it should be, between the 382 and the 618. You see that? Right? You tagged your 382 right here with the end of wave C. Oops. Tag your 382 with the end of wave C, and then with your B wave or your consolidation reversal, you came even lower between the 0.5 and the 618. You expect this region, you expect your retracement to end over here, and then you should get continuation for wave 3. Also remember, we're not just doing price, we're doing time. So let's time wave 1, our purported wave 1, which has taken 14 days and 20 hours. So let's say 15 days, okay? 15 days up. And wave 2 took about 21 days, okay? Not counting the consolidation reversal. So again, waves of the same degree are comparable in time and in price. That's comparability. 15 days, 21 days. You're talking about wave 1, wave 2. You're not, you're talking about the same degree of waves, okay? So that's how I would do the count. That's how I would do the analysis on the short time frame for ENS. On the high time frame, short time frame, now we want to zoom in to this consolidation reversal. Okay, and if these trades are easy, you know what? Some of the easiest trades in Elliott wave theory are trading impulses at wave 2. Why? Because with a high degree of probability, you will not get wave 2 coming way below the 618. Okay, I usually put a stop at the halfway point between the 618 and the 786. So I just buy. If it's an uptrend, sell. If it's a downtrend, and I use the 618. I used to trade only that. That used to be my only move. It was very profitable. I think I did $50 to $3,000 in like, 8 days? Just doing that when I was training and day trading. So, this is kind of like, you can do it with your eyes closed, right? You use the golden mean, and it's nothing's for certain, but highly probable that you get a bounce before you come into the 618. So now let's focus on the consolidation reversal. Let's go even on the smaller time frame, so like the hourly time frame. And that consolidation reversal would happen here, okay? As I read it, this is your initial break of structure, okay? So you got a 3-wave move with a leading diagonal for your C wave, but that would be essentially your big A targeting, once again, wave 4 of the previous trend, okay? So let's clean that up. It would be something like, no, it wouldn't be a leading diagonal. That's your A wave right there for me. And this is your B wave. 1, 2, 3. Okay. So your A wave and your B wave are comparable in kind of time. So I would say that's not bad. But sometimes the B wave, sometimes the A wave's like this, and the B wave takes like 2 or 3 times as long. Hard to read. B wave can be, but just judging by how long wave 1 took, 15 days, and how long wave 2 took, 14 days, I don't think that your consolidation reversal, if this indeed is an impulse to the upside, is going to take that much longer. So again, everything's in context. You got to think. It's like a multi-layered puzzle. My consolidation reversal, I think this read would be more right than it is wrong, okay? So A, B, and then I'm looking for another round. So that's my first degree, okay? And then this would be this is let's see. Trying to make sense of this. So I read an A wave here. Is this small a, or is all of this small a? That's the question. I don't know. I don't know. What do I see here? This doesn't look impulsive to me, okay? I'm gonna say this. This is small a, this is small b. Your wave 3 starts here. But I just said that doesn't look impulsive. Okay, how about this? This is small a, and small b is a viciously bullish running flat. Because that doesn't look impulsive to me. I'll stand by that. That doesn't look impulsive to me. So actually, your impulse starts here at 10 a.m. I would say that is likely, because this does not look impulsive to me. So I do not want to ascribe it to small a, nor do I want to ascribe it to the beginning of the impulse. It just doesn't look impulsive to me. Look, I see 1, 2, 3. Every time I see 3 waves, I know it's corrective, okay? And then big wicks to the downside. No, that's not it. That's not it. That's corrective. That to me looks like a bunch of complex correction, and then C. So ABC, that's a flat correction, but very bullish. And actually, so what we can do is we can turn on our indicators and try and see if our momentum indicator don't show us strong bullish divergence. If it shows us strong bullish divergence on this hourly time frame, I think that this is a likely read, okay? So you're likely to go up from here. And then also remember, context. Judging by the time it took you to make 5 waves in the primary, a first wave of the bull run for ENS, and then, 15 days and then 20 days for wave 2, you're likely to move up faster sooner than not, because your wave 2 is already taken a little longer than wave 1. So you can't take too much longer for your AB base. Okay? So yeah, let's look at, and let's see, do we have divergence? We do have some bullishness, but I don't know if it's divergent. Okay, I don't see divergence on the hourly time frame. I see it's bullish, but I don't see it's divergent, right? So it's higher here, and it's about higher here, and it's about the same pitch. So it's not divergent. It's bullish, but it's not divergent. Yeah. Let's see if we can't see some divergence on the 4-hourly time frame. It's unconfirmed because there's no cross of the K and D lines here. It's unconfirmed. Once this crosses, we can have more information, but there's not enough information. Let's go on the smaller time frames. Let's go on the 15-minute time frame, see if we can't see anything. You know what? On the 15-minute time frame, it looks to me I wouldn't be surprised if it came down and reset here, okay? So this B wave wasn't finished. And so you would get something like this. Okay, that's what the 15-minute time frame is telling me on the small time frame for ENS. Anyway, at the end of the day, like all of that stuff, the small time frame stuff, especially at the bottom of a market, or what's likely to be the macro bottom of a market, is not really important. What you want to do if you're trading this, or trading anything at this point, long or short, is to make a large time frame read, because that's where the money is, to be honest. Right? Make your large time frame read, either trade it up or down. If you think it's going to go up, just accumulate your longs, either spot or leverage, and then set your stops below the halfway point of the 618. Not financial advice, but that's what I would do. If it's gonna go up, let it go up on its own time. Let it 80 base. It's hard to read it, corrective price action and know exactly when it's going to turn around, right? But yeah, that's what I see on ENS. Let's see, any other questions? ENS started at the big BTC crash of November. Yeah, I just remember people going into it and people, talking about it. Whoops, wrong window. I always choose the wrong window. Yeah. ENS is like I just remember people buying ENS addresses. So I clearly remember that when it became possible to buy like your name.eth. So I know around when it started. And then I remember a big airdrop for people that were involved in ENS. So yeah, so that's pretty much it. Let's just have a quick look at the rest of the market and we'll call it a stream. All right, to do that, let's first look down our watch list. And guys, don't forget to like the stream, subscribe if you're not already subscribed for daily Bitcoin updates, technical analysis of not only crypto, but traditional markets, like if you got value or if you're getting value, okay? So, as we said before, we have one mover in Litecoin, right? And it's likely that we go up from here, okay? It's still playing out. It's not completely oversold on the daily time frame. You've played out this rounded bottom consolidation reversal right here. It's likely you push up. Likely. Very likely. Okay. See, you have a bottom here. You have a bottom here. Likely you continue. And at the end of the day, you're making some sort of inverse head and shoulders, right? So Litecoin seems to be moving in that direction. EOS seems to start to be moving in that direction. And the good thing about this, the fact that you're getting an inflection point with the momentum being cross bullish all the way oversold, is very, very, it's a good indicator for continued upside movement, given that you have so much runway in the momentum indicator. That's important. That's really important. Yeah. And as you can see, there's an inverse head and shoulders that you basically broke out of and are retesting in EOS. Let's see, anything else? Anything else not in our watch? Well, yeah, ENS obviously. ENS kind of doing the same thing. Let's see. Here, let's move this. BNB. Okay, see, this is very nice. This is very nice. You can see this on the daily time frame. BNB is super bullish. Like ENS, BNB started moving impulsively on July 13th. You can see 5 waves very clearly here. 1, 2, 3, 4, 5. Okay? And then you can see it rounding out. This is exact. I always say, BNB, if you want to learn how to read price action, a lot of times people will see a pattern in books and then they'll look at charts and they'll be like, well, it doesn't look anything like it looked like in the book. Like the example is nice and clean, but then in real life it's like jagged and it's hard to make out. BNB is the beginner's guide to reading price action. Everything that you see on BNB looks so friendly and easy to read. I mean, it's just ridiculous. I don't know why. They have regular burns of BNB. Maybe it has to do with that, but for some reason, these charts are always so clean. 1, 2, 3, 4, 5, almost like in the books. And then the rollover. Look at how clean this rollover is. You see the rounded top? You know how I always talk about rounded bottoms being reversal signs for continued upwards price action? You see the same thing on the top. That's literally why people call it rounded tops and rounded bottoms, for reversal. Whenever you're looking for reversal, look for rounded tops and rounded bottoms. That's what you see right there. So it rolled over. That's why people say things roll over. You see, that's the roll. That's the roundness. And then you basically had a zigzag. So 1, 2, 3, 3 waves down, but it's quite bullish. So it's like right at the 382 or between the 382 and the 0.5, and then you start your AB basing here. And when you talk about AB basing, why do you call it AB basing? Because you're forming a base. You can see that so well in BNB. Like that base has been held so nicely, right? You held it here, you held it here. It was resistance here, you held it here, you held it here, and you're holding it, right? So let's just zoom in on that. I think BNB is such a joy to chart and a joy to read. When I was like, even an intermediate chartist, when I was confused, I looked at BNB. If BNB showed to be bullish, and I was trading like Bitcoin or Litecoin or anything else, I'd be very careful shorting, because whatever BNB is doing, because the crypto market's correlated, right? If BNB is going long, I'm not gonna go short, because if I can read it in BNB, that's probably what the market's doing. Okay, so this is a nice A wave targeting wave 4 of the previous trend. That's your big A, your 3-wave move of big B right here. Okay, and once again, you have a small A, a small B. I mean, like, do you see? I know I'm repeating myself, but it's so clean and easy to read. Like, the 2 degrees of AB basing are textbook. 1 degree, 2 degrees should happen on a smaller time frame here. You're completely oversold on the price action. Like, BNB's going up, shorts beware. Like, that should be, BNB should be the bellwether for the entire market. And, anybody should be able to read it because it's so clean. It's so clean, okay? If BNB looked iffy, oversold, or like it was breaking down, I'd question my life decisions right now, like heavily, right? But I feel so much better after seeing BNB. If I'm long and BNB looks like it's bottomed, I feel so much better. Like some of the hardest things to read are like low cap altcoins, like Vervain or something like that. Like good luck trying to find patterns here. Like, you can find patterns, but this is advanced stuff, because it's so volatile. But BNB seems to be very, very steady. But even on Vervain, you can see what we've been seeing. Like, this is beautiful. Let me show you this. So 4-hourly time frame, and this is how I trade, by the way. One of the reasons I look at other things is for corroboration. I don't, let's say, and once upon a time, I would only trade Bitcoin up and down. Okay, I would day trade Bitcoin long, day trade Bitcoin short. And one of the ways I understood what Bitcoin was doing was I would look at other assets as indicators, not because I was trading them, but as indicators, okay? And if you keep seeing the same thing, the market's likely going in that direction. Not every asset's going in the same direction at the same time, but you're looking for overall trends, right? You created a lower low here, right, in the price action, and here you created a higher low. You didn't just create a higher low, you created a double bottom higher low. Dude, how bullish is that? This is on the 4-hourly time frame, not the 15, the 4-hourly time frame. You have strong bullish divergence with a double bottom, 2 double bottoms. Yeah? So that's, again, just prove it to yourselves. Don't just look at one asset. I know, obviously if you trade one thing, you're like, oh, I'm looking at this chart and it looks like it's going to go up, or looks like it's going to go down. In 2022, crypto is so correlated that you should be able to see either bullishness or bearishness across the board. It's very rare that there's going to be one thing that's doing one, its own thing. Once in a while it happens. But typically you should be able to see bullish or bearish patterns in all the different assets and make your decision accordingly, okay? So yeah, let's move. Nothing really yet. Reserve rights. Just a bunch of A/B basing, right? A bunch of consolidation, but nice consolidation here. Okay, let's go to our general watch list again. Biggest movers, and another reason, like you should know, we've been on support, and if we're going to break down, it likely would have happened with as many chances as we've had to break down. Okay, you would have seen it somewhere in the market. If you go to your general watch list, you would have seen something down 20, 30, 40% already, right? Some shit coin somewhere. But what you see actually is your biggest losers are essentially still maintaining market structure. If your biggest losers, if you go to your general watch list and the biggest loser, which right now is PYR, right? Vulcan Forged, is showing strong market structure, right? For reversal. This is a high time frame W pattern where you make a low, you make a head, right? This is an inverse head and shoulders, essentially. And you're looking like you're basing for the right shoulder and not breaking down. You know that the market's likely going up. It's not a question of if, it's likely a question of when. Again, it's always probabilities, but the probability is high that you get an uptrend rather than a downtrend. Okay, and here we're looking at Matic, Polygon. Again, you can see, what do you see here? You see a type of cup and handle pattern, okay? That would be your cup. This would be your handle. These are bullish patterns, right? And what do you see? You see price starting to break out. Okay, this is why we're saying September is likely to be quite bullish. This small move, okay, it's not going to be a small move, but this move in Polygon would be basically the height of this cup superimposed from the neckline. So if you took that, it would look something like this. Okay, you take your arrow, you superimpose it to the neckline, and essentially you're going to meet these highs right here. So you're going to $2.44. That would be this move alone right now. Guys, don't short support. We're on support, and you can always break support, but don't short support. Short the retest of support, okay? Let me talk about that in a second. So 200%, that's a 200% move, right? That's a 200% move before you would have to consolidate again, okay? And if you just turn on your, let's just turn on the VBVR real quick, horizontal volume indicator. Let's see if we can't see that here. Not so much. We'd have to go on the larger time frame, so let's leave that alone. But so just a small word about how to short. Like, there's nothing wrong with shorting the market, and I fully intend to short the market once we top, once we get to a position where, okay, we start to be oversold. I want to make money in the market. I have a business, right? I'm not in the business of losing money or being, permanently long. Like, I just want to buy bottoms and sell tops. So when we get to the top, not only am I going to sell off my assets, but I'm going to take a small portion of my portfolio and start shorting and accumulating shorts, right? That's just smart. But I'm going to do it. I'm going to try and do it intelligently. Here's how you short intelligently. Don't try to short, obviously, don't try to short green candles. you want to short red candles actually. People say you don't long green candles. Yeah, no. You want to short retest. Don't short support. Short the retest. So let's say this were bearish and you broke down. Okay, you broke down from this level right here. Don't short this because you may just be completely wrong and get smoked. You short when the price comes back up here, retests this lost level, then you short right there. Okay, that's when you enter your shorts. You know, depending on how you're going to structure your trade, you know, it depends. You know, maybe you enter a third of your position there, a third of your position after a few pips down more, and then a third of your position, the last third of your position once you reach another sort of milestone. I don't know. You know, there's so many different ways you can do it, but don't just jump into shorts when you're at support. That's like, I've done it before. It's crazy. You know what I mean? Like, you're not giving yourself a chance. You short retest. So when you lose support, you're testing. You break down. Okay, let yourself break down and come back up. Then enter your shorts for the move down. Okay, and hopefully it's not a question of one of those situations where you wick down and then kind of go up because that was a corrective move. That's why, you know, whatever, at the end of the day, learn to read price action, learn to read context. That's the only way. There's no way around it. Like, you can cheat it, you can try and use indicators to cheat it, but it'll catch up to you. If you're in the game long enough, you'll see that to win, you really need to know what you're doing. You can't really fake it. So yeah, that's pretty much it. Guys, any other questions? Matt, so Maurice says, check out the hourly on BTC or play with the bearish ideas. Okay, gotcha. Milad says, Matic better than ENS? Okay, when you're talking about, so I'm a trader, okay? I'm here to make money, and I'm buying things that I think are going to go up, and I'm selling things that I think are going to go down, okay? What am I buying? I am paying attention to fundamentals. I'm paying attention to if, you know, it's going to rug, or if, you know, the team is doxed, or if they're respectable, or if they're not scammers. You know what I mean? Like, I'm also paying attention if, does the protocol stay up online? Like, I'm not touching Solana, not because I don't think, you know, I don't know, maybe it might do well, but I'm not taking that risk. It's too much of a risk. Solana's been down. They turned the network off. It's just like, what the hell? Like, they give money away when they don't know they're supposed to give money away. Like, for me, no matter what the chart looks like, if the fundamentals are that messy, I don't want anything to do with it. You see what I mean? So when you say, is ENS better than Polygon? Polygon Matic has been around for quite some time. Polygon Matic was, you know, the side chain, or the, I don't know what the proper term for it is, but like, it was basically the helper chain for Ethereum when Ethereum was dealing with scaling issues, which it still is, okay? And Polygon proved to be very useful, you know, reduce transaction speed, or increase transaction speed and reduce transaction costs, all that stuff. And fundamentally, the team, they're serious developers. Yes, Polygon Matic, I'm investing in. ENS is essentially just an offshoot of Ethereum, right? And I guess it's useful. I don't know how useful it is. It looks cool on Twitter to have your name .eth. I guess it's cool. I mean, but what's better, right? In terms of like the team, in terms of how many VCs, venture capitalists, are investing in it. Like, that's how, if I'm looking at if something's better than something else, I'm basically looking at it in terms of an investment. How risky is it? Is it going to rug? So if I buy right now, no matter what the chart looks like, is it going to be around to do the chart move that I think it's going to do? If it is, then it's fine, okay? And if I think it's, you know, going to be a big mover, then I'm buying. But you know, ENS is fine. I don't think you can really compare the two because ENS and Matic do different things, right? They're what like it's kind of like a side chain, a helper chain. ENS isn't a helper chain, you know, it's a name service. So I wouldn't really know how to compare them. But in terms of charts, everything looks good right now in terms of chart. If we're just looking at the technicals, okay. Oh, so Milad says better in money, low market cap. So Milad, it's not always the case that the lower the market cap, the more the gains. Sometimes yes, but it really depends. And to do that comparison with ENS is difficult because it's so young. You don't have enough data to say I'm comparing this chart and that chart. Like for instance, why do I say Litecoin is so bullish? Why am I so gung-ho on if you're not invested in Litecoin, you don't like money? And everybody laughs and say Litecoin's a shit coin. Everything else goes to the moon and Litecoin doesn't move and blah blah blah. Like because they haven't read the chart. Okay, when you look at the chart, let's look at. There's a reason Litecoin's one of the first to move. It's extremely bullish. I tweeted about this maybe a month ago or a few weeks ago. I don't know. But go on the high time frames. Okay, in the monthly time frame. First, you know, everything's bullish right now. But Litecoin is particularly bullish. And one of my largest leveraged positions is on Litecoin because I think it's gonna go crazy. Ever since it came out, it's literally been in a leading diagonal. Guys, do you know what a leading diagonal is? Instead of doing this 53535, sorry, that's not a good example. Okay, instead of doing this, which is what you typically see for an Elliott wave impulse, right? You're going up impulsively 53535 or down impulsively 53535, something like that, right? That's a typical impulse. Litecoin has been doing this. What do you think happens with wave 5? Right? And sorry, this is not a good example. It's more like this. Yeah. So wave 5 in these 53535, it's still a 53535, but it's a concerted wave 3. Wave 3 is the same length as wave 1, which is the minimum length of wave 1. As a result, you're accumulating all these buyers and all these sellers and all these buyers. You're accumulating all these orders, and wave 5 goes crazy. And if you look at Litecoin's whole entire life, you can see that it did exactly that. It came up for wave 1, went down for wave 2, just like we expected it to. You know, a sharp correction, taking about the same amount of time that you took for wave 1 to go up. Retracement of the 618, right? With wave 2. Wave 3, you expected it to go higher. People shit on Litecoin because of this move. They don't understand this move. In the time it took Bitcoin to go wave 3, it went considerably higher. But Litecoin just went to a few $100s. So imagine Bitcoin still being at a few $100s. That's what Litecoin is right now. People don't understand what I'm trying to say. Litecoin and Bitcoin came out near the same time, okay? Around 2012, 2010, 2012, right? And while Bitcoin's in the 5 figures right now, Litecoin's still in 3 figures. Guys, look at the chart. There's a reason. It's not because Litecoin sucks, right? Just looking at the chart, it's a good investment because fundamentally it's been around for quite a while and it doesn't look like it's going anywhere. Okay, so fundamentally you're sound. You make a buy order, you get in a position. You shouldn't be afraid of Litecoin rugging and disappearing or going down or the chain kind of forking or anything like that. It's sound investment. So now you just have to focus on the chart. The chart says buy, 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 because for all of this time right here, for 3,300 days, you've been going up and down and chopping. You pretty much haven't been doing anything but accumulating. This is why people don't understand. You think all of these institutions are stupid? All right, I'm going to say something. It's not the fact that an institute, just because it's an institution, just because it's a venture capitalist, doesn't mean they know what they're doing. Okay, let's all agree to that. Like in this past bear market, we saw so many big players with a lot of money mess up, right? They leverage trade. They don't even know how to do risk management. They put all their eggs in one basket. Like they're just a mess, right? People getting liquidated left and right, like they just started trading. Yet and still, like, they're trading for other people. Okay, they just have bad risk management. Like even myself, I have a bunch of leverage trades, but I have a bunch of spot trades too. Like, what am I, crazy? Like, I'm gonna put all my net worth in leverage trades, so if the market goes against me, I'm gonna lose my shirt? No, I'm still going to be playing the game because I got spot trades, which are not multiplied, right? However much I put in, if I put in $1, it's just $1, and I'm going to let the price go up. But I also have some plays where I put in $1 and I multiplied it by 10 or multiplied it by 3 or multiplied it by 5, okay? But that's risky because if it goes against me enough, then I lose my whole position, okay? You guys understand that. There's a reason, PayPal, there's a reason the smart money, when they were accumulating crypto, they were accumulating Bitcoin, Litecoin, and that's it. Bitcoin, Litecoin, and that's it. Sometimes there's some other ones here and there, but by and large, it's Bitcoin, Litecoin. One, because Litecoin's been around the block. They just did the same analysis I did. You want to get something that is tried and true. It's not a fly-by-night operation, okay? Obviously, a lot of them got Ethereum as well, but Ethereum is relatively new, okay? What is it? Only 2015, 2018, something like that, right? Litecoin's been around for a decade, okay? So you have something that you know has been around. It hasn't broken yet, so it's probably not going to break anytime soon. And if you just look at the chart, okay? You pay somebody on Wall Street to look at the chart. They're like, oh, that's opportunity. Because remember, what do we say about these areas? They're areas of accumulation. What happens after you accumulate? You blow. This is the cause. This is the effect. Okay? Don't, like, when I say Litecoin is going to be bullish, it's not because I like Litecoin. I don't give a damn about Litecoin. I'm trying to make money. I've run a business. I put a bunch of money in right here because I'm reading that this is going to explode as a result of all this pent up energy, this potential energy, this capital that's been invested by PayPal, by all these other corporations during this time, during these 10 years. Why was it capped? I don't know. Fundamentally, why did it go into a leading diagonal? I don't know, and I don't care. All I know is that it's a safe bet because fundamentally it's sound, and the chart looks really good, and it's going to continue up like everything else. And this is an opportunity. I wasn't around. Well, I was around. Actually, Litecoin was one of the first things I bought, but I didn't know anything about anything in 2017. I didn't know anything about anything. I didn't know how to read a chart. I didn't know how to do analysis, fundamental analysis, or anything like that. So I wouldn't know to buy or to sell or when to buy or sell. I didn't know anything. But now that I know and I look at the chart, my eyes grow wide open. So to answer your question in long form, Milad, this is what I call good. And there may be some other assets that go much further than Litecoin because they have a lower market cap. But guess what? It's not, you don't know that. Just because it's 1,000 market cap, right? On the coin market cap, doesn't mean it's going to go 1,000x. It doesn't necessarily mean that. But this, given the chart history that I'm reading, is going to go, and I'll tell you mathematically, the minimum Litecoin will hit. How do I know that? You take wave, and obviously I don't think we're gonna finish wave 5 just in one cycle, okay? Because wave 5 is also going to be comprised of, remember, it's going to be 5 waves for wave 5. So wave 5 is also going to be 5 waves up, okay? However, at least in the first wave, this whole thing is going to be expanded. I know that. Why do I know that? It's because that's how you count leading diagonals. You take wave 1, or sorry. You take waves 1 through 3, okay, and the retracement of wave 4, so the low point of wave 4, and you target the minimum of the phi ratio, so 1,618. So at the end of the day, that would take Litecoin to this figure, okay? Is it going to go in this figure in Q1 2023? No, remember, because that's going to need to put in 5 waves. But this is going to be substantially longer than most other regular 5 waves in the market. Do you see what I mean? Like, don't be surprised if wave 1 is extended or wave 3 is extended. Do you see what I mean? Because you have to make up all of this ground. And as a businessman, I think this is a good bet because it's low risk, high reward. Low risk that I'm taking a coin that has a high market cap. It's been around for a while. I know it's not going to go to zero. You know, if I Jizz Inu might do a 10,000x, but like Jizz Inu might also go to 0. But Litecoin's going to be around. So I put my money in something like this, showing that it's going to go higher than most coins. So that is what I consider good, Milad. When I think of good, I think of risk reward. I don't just think of the reward, because you always want to practice good risk management. I hope that makes sense. All right, let's go back to this. Rosa says Polkadot is the future, they say. I also have a Polkadot position, Rosa. Milad they say Litecoin is the silver of the cryptocurrency. Yeah, perhaps. So what do you think of XRP? I'm in XRP as well. And XRP fundamentally, I don't know. I don't have a huge position in XRP. Okay, let me tell you that. I have a position in XRP. It's a leveraged position. So I took a little bit of money, and using my skills in technical analysis, I multiplied that money. And I put a stop. So basically, if I win big. If I lose relatively small. But if I'm buying the bottom of the market, it's a good bet. But XRP is not something I'm super comfortable with because, they've been in court and all this stuff. But XRP, I think it's going to do okay. But I'm not one of these people that think, because XRP, because of the fundamentals, because of everything that's happened, it's going to go to the moon. No, I look at the chart. Very simply. Thanks for the education. Of course. So let's look really quickly at DOT for Rosa, and then let's look at XRP for Milad. Right here. So DOT. I have a position. DOT I like. DOT is one of those projects fundamentally, like you hear about Solana like messing this up and messing that up and turning off and doing all this kinds of crap. It's like, I don't know how people in good faith put their money in something that literally they turn off every other day. Like, it's ridiculous. I don't care how much money Sam Bankman-Fried has and how popular it is and how good their marketing is. Fundamentally, if the shit doesn't work, why am I going to invest in it? Like, the whole purpose of the crypto is to be safe and to be reliable, right? Safe and reliable. People, when you give them your money or you're dealing with their money, they want safety. They want reliability. The issue with, the bank system and the fiat system is that sometimes you put your money in the bank and that money's gone because they're doing fractional reserve lending, and like in China or in Turkey, you can't get your money out of the bank. People don't like that, right? So if you're using a protocol, if it's not reliable and it's not safe, what the hell is it for? I just don't understand. Anyway, when I look at DOT, I see a bunch of serious developers, people who they haven't done too much marketing. and they're trying to solve an important issue, and that's basically what they put their heads down and they solved or tried to solve for. So, I know a lot of people say, I try to look and see if there's news, and I buy when there's news updates, and I get mad at the team when they don't post updates. I'm the opposite. If you just shut up and do your work, I trust you even more. I don't trust teams. I don't trust protocols, and I don't really trust projects that rely too much on marketing. Because at the end of the day, like, I want to see a good product before I want to see good marketing, right? So looking at this dot chart, what do we see? We see a very quintessential ABC correction, right? So this is like, sorry, let's try that again. Right here. So it's a 3-wave move. So this is a monthly time frame, right? So it's a huge time frame, high time frame. Let's go into cycle, because this would be a cycle wave, yeah? Did that work? I guess it did. Okay, it was in cycle. Okay, so now let's show it. Here we go. There. Okay, so 3 waves down. Okay, and it looks complete to me, right? It looks complete to me. Now, because of when this came out, I don't have any data as to what it was doing here, but I'm assuming that this is just replicating what was going on in the rest of the cryptocurrency market at the time. We were in a bull run, everything was going up. Come April 2021, we experienced the first wave of our flat correction, and then the second wave up, and then the third wave down. This is a 335 flat correction. It lasted from this top all the way down here, let's see, to this orthodox bottom, about 400 days, okay? So basically DOT is on track with everything else in the cryptocurrency market. 3 waves down. And you basically have 400 days, so it's likely that your next move is up, okay? Now, what I would do is use a little bit of math to verify that this C wave is indeed finished. So, as usual, I take my Fibonacci extension tool, take the distance of A, retracement of B, and what do I get? I get my trusty phi ratio, the 1,618. Mathematically speaking, highly probable that we're all done, okay, with this 400-day correction. Do you see? Because you hit an important level. Remember, these C waves, you target the 1 to 1,236 typically, but when you do extended C wave movement, okay, extended impulsive price action, you target the 1,618. So you look either here or here for completion of the C wave. You get the 1,618, know that they call it the golden mean for a reason. Once it's hit, think of whatever trend to be exhausted or completed, okay? So that's kind of like how I would zoom out, and as usual, you go from high time frame to small time frame. So I'm now going to zoom in. I have all the context in my mind. I know exactly what I'm looking at, okay? So I go on the daily time frame, and I really want to pay attention to this region right here, okay? And this region is a consolidation reversal pattern, it looks like, right? And it starts, it seems, on let's see, wait, did I zoom in too much? I think I zoomed in too much, apologies. Yeah, here we go, sorry. See, I lost my reference. I zoomed in so much. It's so important. Like, you always want to, that's why sometimes I draw the circle. You always want to know what you're looking at, okay? Because, a lot of times when you're looking at price action, it's all fractal. And so it's like, are you looking at a small pattern or a larger pattern? Like, what time frame are you looking at? So now I look at this big wick. Remember, when you see a big wick, either up or down, you're looking at the exhaustion of a trend. You want to pay attention to those. They usually signify the beginning of something or the end of something. And this we have on May 12th, and I've said that date a million times on the channel. If you're subscribed, you'll know exactly what I mean by that. That is when most altcoins put in their orthodox low. An orthodox low, according to Elliott wave theory, is the technical low of a trend. Okay, so remember, we just saw a C wave. That's the technical low of that C wave. And how do we know it's a technical low? If you turn the volume indicator on, you'll see a volume spike. You see that volume spike? That's what we call capitulative volume. It means everything is exhausted. All the sellers, the selling for, I don't know, 150 days or something like that, right? During that C waves. Exhausted. 1 second. My wife's calling me. Hey, babe, I'm streaming. Just join the stream. You can talk to me there. I'll talk to you after. Okay, bye.
You're streaming again?
Yes, I'm streaming. I'm streaming. You're talking right now on the stream. Bonjour, Nicolas, ça va? Alright, bye.
Good luck.
Bye. God, like she's subscribed and she should know I'm streaming. I don't know why she always calls me while I'm streaming. Literally always calls me while I'm streaming. Alright, so you see that capitulative volume. That's the end of the trend. So here you want to start counting your consolidation reversal, okay? And yes, I drew a rounded bottom, and that is, there's a reason why it's a rounded bottom, because it's a reversal pattern, okay? Remember, rounded bottoms, rounded tops. You're looking for bottoms, you're looking for tops. Look for that rounded pattern, okay? Initial break of structure, that's your big A. 3 waves down, that's your big B. Okay? I would say your small a. Aha. This is a little tricky, but I think I got it right here. Your 3 waves. Sorry. 1, 2, 3. That's your small a. And this is dreadfully challenging to read as it's forming. But once it's finished, you get a better idea. Okay? And here is very bullish. You have what you call a running flat, okay? And a running flat is basically your C wave doesn't reach the level of the inflection point of the A wave. It's basically so bullish that it put in this impulse and it's finished before it comes down. Because remember, flat corrections tend to come to that same level, if not break that level with that C wave. But when they're really bullish, they get slanted. They get slanted like that. Whoops. Like that. That's a running flat. That's exceedingly rare. You only see them when the asset is really bullish, and you typically see that at market bottoms. When for a long period of time, people have accumulated, nothing's happened, right? Remember, this is, put it into context. Everybody who's been bullish on Polkadot, everybody who's liked Polkadot, has had 100+ days to buy at these levels. This is why it's really bullish, because all of these orders are accumulated here. And what you're going to do, this is your cause, this is your effect. If indeed it turns around, which likely it will, because a breakdown of this pattern would look like this. You would actually break down up here. If this was not a consolidation reversal, this pattern would have to play out to the neckline, and the rejection would be up here. Okay, so at the very least, you're going back to around $11 for DOT, and likely you're going to break it. But if you were, let's say this was completely wrong and it was just going to zero, the whole entire cryptocurrency market, right? You reject off here, and then you come down and make lower lows. Do you see what I mean? Yeah, just look at this simply as a range. This is a big range right here that you've been in for 110 days, and you've just been going up, down, you're going up again, okay? You find some resistance, then you go down again, but this should be taking you up and out. So that's Polkadot. And yes, Polkadot is one of my leverage positions. I like the project fundamentally, and just, everything's a good buy right now. I mean, this is a layer 1 protocol that's going to be a huge deal, right? Because of interoperability, which is a huge, kind of problem to solve. And they've been working on it for quite some time. And they have all these, partnerships. They have all these developers. They have all this technology. So yeah, Polkadot's going to do big things. They've been keeping their heads down and working really hard. So fundamentally, I think it's going to do well. Technically, it looks really good. I mean, you're buying market bottoms. It's always really nice when you get to buy anywhere over here, right? Anywhere over here, actually. Even if you bought at $11, people don't understand. Let's say you bought at $11 and right now it's at $7. Like, you should be patting yourself on the back, because this is going well into the hundreds of dollars. So will you really care that you bought it at $7 versus at $11 or vice versa? You know what I mean? These are market bottoms. What people should do is put all their energy into accumulating. I'm like Elon Musk after he sold PayPal. Got $180 million, took $110 million, put it into SpaceX, took $70 million, put it into Tesla, put $10 million, put it into the Boring Company, or something like that. He literally had no money left for rent, had to borrow money for rent. I'm not gonna lie, I'm in that situation. I took all the money I had, put it into this market. People gotta realize opportunity when they see it. As a chartist, I look at these charts, like chart after chart after chart after chart, and I just want to buy. I can't understand anybody looking to sell, especially when it's clear from like this point on in July what we're doing. Like, it's not a question of, like, yeah, some people like are day traders and they make their money, trading up and down, short time frames. Fine if you want to, but like, why waste time? Like, why lose sleep? Like, I don't want to take not one loss. I just want to accumulate, and wait. If you can wait, you will be rewarded, because this is gonna go to, God knows what. Right? So that's DOT. Right? Now let's look at XRP real quick. XRP, I have it here. Oh, actually I have it in my... Oh, we're back above 20,000. Interesting. Let's see. XRP. Okay, so... And another thing. When you're charting, you notice that, just like, in math, you see there's such a thing as symmetry. There's symmetry, right? So let's just say, so this is 110 days from the orthodox low, right? This is XRP, by the way. And it looks very similar to Polkadot, looks very similar to a lot of other altcoins. Everything looks good, right, in terms of a chart analysis. It's 112 days, okay? Exactly, from here. Okay? 60 days into this consolidation reversal pattern, if that's what you believe it is, or whatever it is, this range, 60 days is half of it, okay? And that's right here, the 11th of July. 60 days. Right here. Guys, that's the middle of the pattern. That's pretty much the middle of the pattern, right? That's the middle of the pattern. Like, there is something to be said. Like, looking at all of these patterns, we notice that math comes into play, right? Math, geometry, all that stuff, Fibonacci. The middle of the pattern is 60 days. So if it took 60 days to form the first half, would it be that crazy that 60 days after the pattern would be over and you then start going up, right? And remember, I'm counting 60 days. I'm counting the leg down. So that it's almost exactly half. For everybody, a lot of analysts and a lot of pundits and influencers are saying, oh, we may be we're gonna chop for like five more months or 6 more months or 1 more year or 2 more years. Like they're just pulling stuff out of their ass. But if you actually look at the chart, we're pretty much done. It's a question of days, not months. Okay, it could happen today, it could happen right now, but like the symmetry would be completely off. And you may think that's weird, Dean. Like, this is an art class, but like math, nature, Fibonacci, like this is all geometry. A lot of times you see these symmetrical patterns, right? When we talk about an inverse head and shoulder, right? Do you see inverse head and shoulders that look like, I don't know, that look like this? No. When you see head and shoulders, inverse head and shoulders, you see something that looks like this. You see head and shoulders, you see something like, if you look at Bitcoin dominance, it looks just like that, right? Let's have a quick look at Bitcoin dominance. There's symmetry to it. Don't overcomplicate it, right? Like, look at the patterns. Let's see, dominance. Here. Dominance. Here. Show you this. Okay, maybe not on the monthly. Well, it's fine on the monthly. It's better on the weekly. Okay, look at the symmetry. This is a head and shoulders. It's not perfect, but it's relatively symmetrical. Okay, so for people thinking we're gonna be chopping up for 5-6 more months or 2 years, like they don't know. You don't have to be perfect, right? You can make tons of mistakes, but to assert that we are going to be going sideways for 4 more years, like you're basically saying, I know nothing of chart analysis. It doesn't matter what style you're using. What could tell you that you're going to spend years in correction? Like, it's basically at the neckline and it's about to break and it looks like it's the right shoulder. It's symmetrical as the left shoulder and the head, all that stuff. It looks good, right? It's a question of a few days, maybe a few weeks, maybe at most, right? So yeah, let's finish up with XRP real quick. Let's see, XRP. Where's XRP? Here it is. What were we looking at? Okay, XRP. Is this the best chart I have on KuCoin? Let's see, XRP. Let's say Binance. Bitstamp probably has the best one. There's a reason I put that in. Let's see also the Binance chart. So this is the KuCoin one. I think this one's the best one, Bitstamp. Let's just use this one. Okay. So XRP, something that came out in 2014, looks like it put in, like everything else, an impulse, okay? Something happened here. I'm not really concerned with that, but here we can clearly read 5 waves up, okay? That's what we care about. You have 5 waves up, and it looks as if you have a very nasty 3 waves down. Okay? And so what we're going to do here is very quickly look at how long it took for those 5 waves to put in. So from this bottom on January 2017, about 350 days up, okay? And then these 3 waves down, it looks like a nasty zigzag pattern, okay? It's just, sometimes when you put waves, corrective patterns in, you're in a flat correction, so you're not just going down, you're going up and down, right? Like something like that, or even something like that. This just like, ugh. This was brutal. If you were in XRP, you really felt it because there was no respite whatsoever. okay? And that took, we want it to take close to 350 days, okay, for that sort of, what would you say? For the idea, the guideline that waves of the same degree are equal or comparable in time and in price, okay? So we can see that here it took 812 days, okay? So you have basically twice as long, okay? And okay, we're assuming that that whatever happened here is not part of this impulse, okay? That's the assumption, okay? You gotta know your assumptions, because you're not always dealing with complete charts like Bitcoin and Ethereum or something like that. Like sometimes you're dealing with truncated charts that are cut off like this, okay? So let's just say that this correction right here was a correction to this. And if that is the case, then you corrected twice as long as you did going up. Even worse, you know what? It's even more. Look at this. Look at this. Let's do this. Let's do this. I think XRP may be really, really good, not for reasons people think, okay? Not because, you know, it was quote unquote suppressed by the SEC or anything like that. Just looking at the charts, okay? Looking at the charts. So let's say 350 days for the way up. And actually what I want to do is I want to count all of this as a correction right here. Because from what I'm seeing, this is an entire correction. This entire correction is a running flat. So when people say, oh, XRP is going to, like, you know, melt faces and stuff like that, it's going to do really well, it's literally hasn't done anything since 2017. Kind of like Litecoin. It's been, although, you know, XRP did really enjoy some positive price action here, ever since it hasn't done anything. It's been in a running flat. And what do we know about running flats is they're excessively bullish. You don't see them every day. They're rare, okay? Go into The Wave Theory by Bob Proctor and AJ Frost, 13th edition. You'll see, you know, running flats are exceedingly rare. You also see Steve Sinclair talk about that. Elliott Waves Made Simple. You know, there's 3 types of corrections. There's flats, there's zigzags, and there's triangles, okay? The flats, there's regular flats, irregular flats, or expanded flats, and running flats. And then there's also complex corrections, all that stuff. But this could be a complex correction running flat, and the running flat is exceedingly rare. You don't see it every day, and it's very, very bullish. So for basically 5 years, kind of like, so how long was it? I know in Litecoin it's like 3,300 days or something like that. So about half the time. I'd still say Litecoin is more bullish because, do you see here? This correction, I think the end of the correction was on June 13th. I think that was the, or actually, sorry, on May 12th. May 12th. Okay? So that's the orthodox low for that 5 waves down. So you literally had, and this is true, sometimes you'll have a complex correction that takes 3-4 times as long as the impulse, okay? And that's typically what you see in a wave 4, okay? So again, because these are all pegged to Bitcoin, it's likely that it's mimicking Bitcoin's price action. So if Bitcoin is going from, you know, whatever it's going to, and then it goes into a sort of a long, complex wave 4 correction that takes 4 times as long as the previous wave 3, then you can probably see the same thing in other assets like XRP. But do you see that? 343 days versus 1,500 days, That's about four to five times. Okay, waves of the same degree are comparable in time and price. Comparable does not mean equal. That's why I don't use the word equal. I know a lot of people say equal. I like to say comparable, because complex corrections like your WXYs, WXYXZs, you can expect them to last multiples of the time it took for you to go impulsive, right? They're the longest corrections, and they basically give people a good opportunity to get in. Okay, so that's essentially what you see in XRP. People had about 15 to 1600 days to get in. Is it as bullish as Litecoin? I don't think so, but I think it's still very bullish. Okay, and for those reasons, right? So in answer to your question, Rosa, yes, XRP is very bullish, because if you're looking at it, you clearly have three waves, one, two, this is a pivot, and then you have 1, 2, 3, 4, 5. Okay, so you have an is that, let's see, hold on, let me count that ending diagonal. I think you got an ending diagonal here. It goes, okay, it goes like this from what I'm reading. It goes 1, 2, 3, 4, 5, ending on May 12th. That's an ending diagonal. It's kind of a complex correction, but it's nasty. That was a nasty correction, right? So again, that's your context, and you jump down into your smaller time frames. Let's turn off the volume. We don't need it. And you can see you have the same thing, right? You have a rounded bottom. You have 112, 16 days of consolidation reversal. B wave. And then here you have your small A right here, and then you have 1, 2, so that's three waves, and then 5 waves. 1, 2, 3, 4, 5. Okay, so I think you're done. Again, ending diagonals. So XRP is really fucking bullish. You look at this, and this is why people were saying, well, you always want to look both sides. I disagree. You want to see what you see. You want to be mindful that you can be wrong and practice good risk management. But I can't unsee this. I can't lie to myself and say, well, it could go up or down. I don't think that. I think it's going to go up. I just know that I can be wrong because I can make mistakes. But I don't think it's going to go down. I see this as, again, a running flat. You have a running flat on the daily time frame, right? Let's bust out an indicator. I can see some bullish divergence, strong bullish divergence on the daily time frame. I don't know how people explain that away, to be honest. People who say it's going to go down, how do you explain strong bullish divergence on the daily time frame that's confirmed strong bullish divergence that's open? It's, by open I mean the K and D lines are open. Okay, they're basically ready to complete. It's completely oversold. We've been in a corrective pattern that, it's hard to debate with for 400 plus days in most assets, right? In XRP, you've been in a corrective pattern for 1600 days. Why would you short that? You've been in correction. You've been in hell for 1600 days. What do you think this is? How much more of a chance to buy do you need? Even if you don't know what you're doing, you just play the probabilities and go long. Come on, guys. Look. Strong bullish divergence on daily time frame right here with a running flat. So you have a running flat on the daily time frame, and we saw a running flat on the weekly or whatever time frame that was, the weekly time frame. The whole thing is a running flat. XRP is really bullish. I mean, everything's really bullish. Guys, we've been down. We've been in a corrective pattern for 450 days. We've been in a consolidation reversal for 112 days. Everything's bullish. But XRP is particularly bullish for those reasons. All right? To answer your question, Rosa. So yeah, I'm glad I'm exposed to XRP. I've had, like I said, 112 days to build positions. People are like, dude, what are you doing for all this time? Like, are you making money in the bear market? Like, if you're smart in a bear market, you're buying. You're buying. You channel, all right? You don't waste your time trading up and down. Yeah, I did that, but it was mostly practice. You know, practice charting and practice trading. To be honest, like the money I made or lost trading, day trading during the bear market is negligible. It's not money. Like the actual money is made buying low on the bear market. If you're smart, this is what you do in a bear market. You put your channel in for, your consolidation reversal pattern, or what you think is a consolidation reversal pattern. You go on the high time frames, like we're on the daily time frame, that's fine. And every time you go down here, you buy. So, sorry, let's go up. Like, this is how I would play the bear market, next bear market, right? I channel. Every time it comes down here, I buy. I buy. I buy. I buy. That's it. It doesn't have to be that complicated, right? I talk about reading price action, reading price action, reading price action. I talk about advanced concepts on this channel. But at the end of the day, I do also use indicators. And a lot of times, even if you don't know price action and you're patient enough, you can make a killing in this market just buying high time frame oversold momentum, right? You buy here, but not to sell up here because you understand the larger time frame, right? If you're really clever, few have the patience and the discipline to do this. But if you're really clever, you look on the high time frame and you're like, oh shit, this is bottomed out completely on the monthly time frame, right? We were all the way up here. Last time we were this oversold was in 2019. I'm buying. So every time, I just want to buy this asset, okay? I'm not going to close my eyes to do it, though. I'm going to dollar cost average into my position. You probably want to do a spot position. You don't want to mess with leverage unless you really, really know what you're doing, okay? And if you do, you mess with only low leverage. And then you have to know what you're doing, because if you lose that position, that's just silly, okay? But let's say you're just buying spot, but you want to buy the lowest. You don't have to be a magician. You went on the monthly time frame, you recognize that this whole range is the low according to the Stochastic Rsi on the monthly time frame. Then you go on the daily and you buy the hell out of everything that's 0 to 30. Okay, if you don't know what I'm talking about, 0 to 30, you look at here, you see this line's at 20, 0 to 30 is oversold. And you can also look here, right? Where's it? No. Here. In the data window, you can see the RSI here, Stochastic RSI. It shows you where the K and D lines are, okay? When it's at 30 or around there, you just buy, close your eyes and buy, right? That's like, if I was running a fund, I'm not doing all this, chart kung fu. I'm keeping it stupid simple. I'm waiting. If I'm trading other people's money, I'm trading on the monthly time frame. And I'm only buying here, and I'm only selling at the top. Period. That's actually, I trade for my wife, for my mom. When I'm trading big money, trading other people's money, I don't want to make mistakes. I'm not trading in and out with their money. I'm trading on the monthly time frame. I'm buying around here. I'm selling around here. I'm making tons of money. That's it. So yes, XRP is going to do great. Particularly well. Okay. So Rosa says, oh, I already read that. Ekwe or Eki says, hi, don't has breakout. Dot has breakout on the hourly time frame. ML says, BTC pull trap. Bull trap or bull trap? I don't think it's a bull trap, my friend. I don't think it's a bull trap. But Dot apparently has a breakout. Let's just look at that. Apparently things started moving, maybe. Oh, we're above 20,000. Yeah, I saw that. Dot is moving a little bit. Let's go on the hourly time frame. Yeah, past few hours have been, yo, Ekwe, thank you. Yes, indeed, DOT is moving. Yeah, DOT is moving. DOT is moving. DOT is moving. This is a good thing. Yeah, things are going green, my friends. Things are going green. I think it's going to be a bullish September. It's going to be a bullish September, right? You can see that, remember, when we looked at the S&P, it started moving. Crypto it has not done anything yet. And what crypto is going to do is going to completely dwarf what any traditional assets are doing typically, it's going to appreciate by a lot, a tremendous amount. Here we see that, I'm just checking my positions really quickly. Yeah, my DOT's doing well. My DOT is doing well. All right, guys, if there's nothing else, we're gonna call it a stream. I think I've hit all the points, right? So ML says we're going to 17K. Oh, no, I haven't. I promised Maurice that I was gonna look at. Sorry. Yeah, I promised Maurice that I was gonna look at the bear case, right? So again, just like I said to, I don't just randomly say, I'm not a 50-50 guy. Like, I'm just going to not have an opinion. I have a strong opinion, right? I'm strongly under the I'm strongly bullish because of my analysis. I look at these charts way too much, but always with the understanding that I could be wrong, and if I'm wrong, I want to practice good risk management to protect myself. Now, if we were to be bearish, so Maurice, if we were to go down, just kind of like what I said in Polkadot, here's what we have to do. We have to go up first before we go down. Okay? There's no way, it's very unlikely, I'm not going to say there's no way, it's very unlikely to break down without breaking up first. If you're betting on the price to go down, you first have to go up, be rejected by this resistance, and then you prove that this consolidation reversal is intra-wave. Do you see what I mean? So you're not dealing with a macro trend change, but you're not breaking down in the short term. And I'll tell you that you're just not. And why? Why aren't you not? Let's again keep it really simple. Forget what the price is doing right now. Just look at your indicators. Once again, use your divergences. Okay? If you don't know how to read price action, or let's say your price action, you want to check, is my read correct? You're making about, not a higher low, not a lower low. You're pretty much been even right here with these two lows. Actually, from here, you're kind of making a lower low, right? In the price action, and then here you're making a higher low. That's bullish divergence on the 4-hourly time frame. So in the immediate short term, expect price to go up as that bullish divergence plays out. Do you see what I mean? And then once you get up to these regions right here, and you can prove this to yourself, you turn on your VPVR, your horizontal volume indicator. Once you get to these areas right here where you're likely to meet resistance, you see that right here? Then if you consolidate and start to break down, that's when you short. But you don't short here because it's almost 95% that you're gonna go up here, right? This consolidation reversal is showing itself, not just in the price action, but also in the momentum, to be, at least in the short time frame, a consolidation reversal for a move up. You get that move up, you get consolidation, rejection. That's the bearish case right here. The bearish case is rejection at the next main resistance. If that answers your question, hopefully it does. Okay, so yeah, that would be bearish. That would be quite bearish, actually. Not a little bit. That would be quite bearish. A major rejection, not consolidation, but major rejection at a significant resistance. So yeah. All right. But yeah. So ML says September 16th, 17K Bitcoin. That's why I'm bearish, because everyone thinks it's bullish. Actually, most people think it's bearish. And I started the video saying this, ML. Most people think that the concept of seasonality of the stock market having bad Septembers and Bitcoin having bad Septembers is going to play out. Also, they think that because the Fed is raising rates, the U.S. Federal Reserve is raising rates, we have a war, we have rampant inflation, that the overall economy is not doing well, that the stock market can't be doing well. So a lot of people are actually bearish, but it's fine. And I actually proved this by looking at open interests. We looked at the Bitstamp, or sorry, not Bitstamp. What was it? We looked at a Phemex longs and shorts. So how many people were opening short positions on Bitfinex and how many were opening long positions. And a lot of people are opening short positions. More people are opening short positions than long positions, unfortunately. So S&P going to 3250 soon. This time we going down first because it's bull time. Are you new? You need going down first for big move to 28K. Yeah. Okay. Anyway, guys, thank you so much for joining the stream. I'm gonna call it a day. Hope this was helpful. Hope this was useful. Definitely like the stream if you got value. Subscribe if you're not subscribed. I'm here pretty much every day with the live stream and some other content that is derived from the live stream. All right. Hopefully you're safe in your positions, whether you're long or short. Risk management is key. Risk management, risk management, risk management. You do not want to lose your shirt. Okay. So yeah. Hope all is well. Take care. I'll see you guys tomorrow. Bye.